Hello and welcome to the No Flipping Excuses Show, the only podcast in real estate investing that teaches what you need to know to find and flip deals right now. Wow. Break free the chains that are holding you back and join us on this episode with Jason Lucchese.
Hey, what's up? It's Jason Lucchese and welcome to the No Flipping Excuses Show. I am so excited that you are here. We have a very special edition episode. I've got my good friend, partner, Mr. Michael Brett Howard joining us on the show. Michael, how are you doing?
I'm doing good, Jason. Thanks for having me here. It's nice to be up front once in a while. I know I'm always in the background, so.
I know, man. You're behind the scenes, aka the myth. He's mything around doing the shows. And
mything.
Yeah, it's a new word, mything.
Yeah, mything. Everybody that wants to be mything, that's where it needs to be.
So, dude, we've done a lot of episodes together, and for folks that don't know, we've done, probably like you and I, probably less than 10 together, but other than that, we've done now 82 shows. So this is episode 83. We've done a lot of stuff talking about Airbnbs, wholesaling, fix and flips, rentals. It's been a pretty cool road, and it's been a really cool journey with what we've been going over thus far, and we've been sharing some really cool stuff. But what we've got to share today, man, is huge. We're going to be talking about some of the strategies that we're doing today, working directly with asset managers from banks, hedge funds, credit unions, private equity firms, and others that we've been working directly in contact with. And Mike's been there right from the get-go when we've been ramping all this up. Mike, what have you been seeing with, being able to work directly with these folks?
It's been crazy. I've definitely seen a lot of opportunities that, I think are missed by most people. I think there's definitely been a level of misunderstanding for the investors that are aware of like working with asset managers. There's just kind of a misunderstanding of, or scared. They're scared. I don't want to be blunt about it, but yeah, they're just kind of like scared. Like, I don't really know how to talk to these people. And when I finally do reach out to them, or when you do reach out to them, it's like, well, they're just like you and me. They're doing a job. They're there to get it done. And when you talk to them real, like you talk to anybody else in your business, it works out pretty well.
Absolutely. And one of the things as a professional in this business, been doing it, since 2002, was in the mortgage origination business, became a full-time investor in 2008. One of the things that you have to do as a real estate investor is you have to stay up to date with what's going on in the market. And what we wanted to do like early on in this episode is talk to you about one of the trends that we spotted. It's really big, and a lot of folks really aren't paying attention to it. We've discussed it on episodes prior, talking about, hey, let's discuss the market. And we've asked some of our guests about it, but I want to read this to you from Redfin. And Redfin right now says only 16% of buyers faced a bidding war so far in March of 2019, which is down from 61% a year earlier. Now, I'm not 100% sure, but here's what this could mean. When you've got homeowners that want to sell their properties, their homes, but there are no buyers willing, to pay their asking price, homes are going to stay on the market longer and prices are going to go down. So what that usually leads to what I like to call, and other individuals that are professionals, a lot of key economics say this, a market correction. You're going to see a correction in the market to where, things go cyclical with us. You remember, if you follow anything like from a data standpoint, you could see going all the way back to the 70s, late 70s, there was a problem. Late 80s, there was a problem. And when I'm saying problem, there's a market correction. Late 90s, there was a market correction. There was a market correction in 2008, as you all know. It was huge. So one of the things that we wanted to share with you on this episode was discussing how you could take advantage of this market correction, right, Mike?
Yeah, you know what? It's kind of like looking in the past a little bit, and it's kind of like trying to, or living, hindsight's 20/20, and you always tell yourself, man, if I had known this in the past, I would have taken advantage of it. Well, that it's happening again, it's like, well, are you going to are you going to have that same hindsight in the future when you missed it and you kind of just watched everyone else take advantage of the shift? You saw the same trends going. You knew what was going to happen. And a lot of people, they just, whether or not you take advantage of it or not, to be honest.
Yeah. And one of the things I didn't really, have when I got started in this business was somebody to really kind of open my eyes up fully to what was about to happen. I just left my job over at Countrywide Home Loans. I would say I left, but everybody was forced out just a few months later anyways, because Bank of America acquired Countrywide Home Loans. But one of the things that I could tell you, if I had the vision back then and I was able to know exactly how the market was going to shift, things would be a lot different for my business right now, the team's business. It would be a lot different. Now, I have no idea when this is going to take full effect, and it's really kind of hard, for me to kind of tell you, hey, it's going to happen next month. I don't have a crystal ball. I'm not 100% sure on when it's going to happen. But one of the things I would tell you is you need to really kind of keep yourself in a position to where you're keeping an eye on the market. Set up some Google alerts and, put in some information for your market. You could see shifts. You could see if home sales are either going up or they're going down. You could see, and right now you could see that there are foreclosures on the rise, people defaulting. We're at an all-time high with, debt as far as, credit cards, car loans, mortgages. There's a lot going on right now. So, the thing that we want to discuss with you today, Mike, is, the things that people could do to prepare for this, right?
Yeah, there's a lot of things you could start doing. And I love that you brought up the Google alerts, because that is a fantastic way to get information. So many times I've been asked, where do you even go to find information, or what site's the best site? Or just recommendations, even when they're like trying to share content and be like, I wanted to share some good real estate related content to the buyers that I have, but I don't really know where to begin. Like, I love that, because Google Alerts will send you that stuff. And honestly, I think that's a great place to start. Set yourself up with a couple of real estate related alerts, see the trends coming. It's not hard to follow because it sends them down in a nice list. And you can actually just look down the list and look at the titles and really get a good sense of what's going on, and then really narrow in, all right, well, this is really what I want to focus in on, get a good pulse on that article. And I mean, that's as far as staying informed outside of listening to a good podcast, like the No Flipping Excuses show, giving ourselves a quick shout out. But outside of listening to informed individuals, that's your next best bet. I mean, honestly, your best bet is finding somebody who's dove deep into that, pool before and has swam through the shark infested waters and can guide you along a little bit as far as, hey, this is a good approach and this one's going to burn your bridge.
Yeah. One of the things that we're starting to see right now is the people that have inventory are the people that are obviously making the most money. And everybody seems like they're, a real estate Pac-Man out there. They're trying to go around, they're gobbling up everything that they could, those little white pebbles that are on Pac-Man. I don't even know what those things are, but...
Well, in our case, they're bulk package deals.
Exactly. So, one of the things that we wanted to discuss with you on this episode is the key for you, really taking advantage of, this correction that's going to be happening is working directly with the institutions. And that could be either a bank, and I'm talking not like the big top 25 banks. I'm talking about your state level and regional level banks. That includes credit unions at those levels as well. We're talking about hedge funds, private equity firms. These institutions, Mike, have inventory, and they don't necessarily, like, a lot of people have this misconception to where they think like these companies, these institutions have these assets and they just list them automatically with REO agents. And that's probably the furthest from the truth, because, what do they want to do is they want to get rid of properties immediately, because they're not in the business of holding on to these assets. They're not in the landlord game. They want to get rid of these as quickly as possible. And as of right now, those who have the inventory control their income. Wouldn't you agree with that, Mike?
That's supply. It's that whole thing, supply and demand. I mean, when you ask how much is something worth, well, it's worth what somebody's willing to pay for it.
Yeah, and guess who the people are that you need to start aligning yourself with right now? That's asset managers. asset managers are the people that you are going to want to align yourself with, because they're the gatekeepers that hold the actual keys, the golden keys to you being able to get the inventory that you need during when a market is going either down or during when a market is going up. And for right now, again, like I said earlier, I don't have a crystal ball or anything like that. But what I can tell you is with the market correcting, we're starting to see it go in a downward correction. And, don't get me wrong, we still do a lot of this in our business, but a lot of folks that don't know what they're doing from a direct mail standpoint, a bandit sign standpoint, Facebook ads to get, motivated sellers, or even spend money on expensive softwares that have really expired data. They're spending tons of money before they're actually making money. And what we're seeing working directly with asset managers is that we're able to get inventory by working directly with these professionals that just want to liquidate as quickly as possible, give it to you at a discount. And what we're trying to do is not just get one property at a time or even two properties at a time. We're trying to get a big bulk package. It could be 20 properties, 30 properties, 40 properties plus. And those bring in gigantic profits, real big profits. And what we're able to do is wholesale them. And we're not using any of our own cash or credit to do it. I remember when I first found out about this strategy that I literally stumbled upon. I was getting really frustrated back in 2009. I needed another strategy to implement within my business. And I stumbled upon working directly with these asset managers. And lo and behold, as soon as I started getting wrapped up in, what they have to offer, I was like, oh my gosh, I don't know if I have enough buyers for all these properties. And then next thing you know, I'm closing on a property package of 40 deals, and I'm pretty much making, a substantial amount of profit on just one deal compared to just one single property, not a package. There's a huge difference, wouldn't you say, Mike, in the package deals versus just like a one-off. Hey, I'm wholesaling you one property.
It's not even just the difference in the profit that you make. I mean, you gotta take a look at the amount of effort and the amount of your time, because your time is very valuable. Okay, and when you're doing the traditional method, which are great, I'm never gonna talk down on wholesaling as far as from direct mail and cold calling and bird dog, and I think all that stuff is great. That's something you should always have in your business, but you also have to think like that eats up a lot. You got to think about how much time do I have versus how much am I getting out of this deal. If you close on a deal and you make that one deal your month and you made $6,000 or $8,000. I mean it's nothing. How long does $6,000 or $8,000 last?
Yeah,
that's enough to get you to the next month.
No, that's true. And I could tell you from some of the hotter markets that warrant higher wholesale profits, they're going to be between $18,000, $22,000 on average per deal. When you're in a little bit more of a, I wouldn't say, let me rephrase. I'd say a bigger market. Indianapolis is a smaller metropolitan area compared to like a Dallas in Texas. So we're going to be averaging in the Indy market $8,000 to $12,000. The Texas area is definitely going to be lower 20s, and that's one property at a time. Now, the one thing that I'll tell you, and did you have something?
Oh, I was going to say, I love that you brought that up. But you also, I think people forget, well, you can make a ton of money on a property in California. I'm like, you're right. There is a huge margin for profit. How much does it cost you to live in California and operate a business in California?
Yeah.
Okay, so your margins are higher from a gross standpoint, but when you break it down and you get the net, it goes down quite a bit. So again, you're back to that point where that one wholesale deal is, it's great, but it's not enough.
Yeah. And, one of the things that I wanted to ask you, Mike, is, when the last recession happened back in 2008, and most of the time you have, full blown recession, you have minor recessions to where people may feel it. They may feel it from like a sting, in the Midwest. Like a bee sting.
Yeah, bee sting. Yeah.
We felt it, pretty heavily last time from an economy standpoint, because a lot of people were losing their homes. A lot of people, didn't have stable jobs. and our unemployment rate was at an all-time high. Obviously, it wasn't being reported correctly during that time, but I believe it was close to 20%. Now we're starting to see it, right below 5% as an unemployment rate. Do I see us starting to have issues like we did back in 2008? No. But the one question that I want to ask you, Mike, is when is wealth created at its highest? It's during crises, correct?
Yeah, you know what? I'll tell you what. That's when things get bad, that's when the rich get richer.
Yeah, and not even the rich get richer. They do because they've been in these.
Well, they know how to take. They know what's coming. It's like I'm not trying to say they're taking advantage of it. They're opening their eyes. They see what's coming, and they say, "Hey, this has happened before. We're going to need this, this, and this." People are going to start freaking out, panicking. Things are going to drop. Prices are going to go. It's going to last for probably this amount of time, and then things are going to correct like they always do. Look at the past. Everything moves in cycles. So again, when I say the rich get richer, I'm not trying to talk down on people that make money in a crisis situation, because I'll tell you what, if they didn't make money, then the crisis situation would last longer. So, my point is saying like you could be one of those people. All you have to do is open your eyes. The rich get richer is just saying like the people that have their eyes open make money because they see the trend and they just take, hop on board.
The thing to bring up too is you talk about the rich get richer. It is really, it's the top 1% are going to really see this.
Yeah.
It's like, some people have their eyes completely wide open and some don't. They just go through. They like the security of, working, some regular 9 to 5. And that's why very few people during a downtime can take advantage and create that wealth. There's huge, gigantic transfers of wealth during downtimes in markets. And unfortunately, some people, just don't grasp it and take advantage of it until it's too late. So that's why we wanted to create this, because we want you to get ahead of the curve. And asset managers, as of right now, we're seeing it as a huge opportunity to have these relationships already in place. When you have these asset manager relationships already in place, either it be a bank, a hedge fund, a private equity firm, a credit union, whatever it may be, there's an opportunity for you to get your stake in there. Wouldn't you agree with that?
Absolutely. I mean, when you take a look at investors that are in the business and you're looking at them and you're like, man, how did they get to where they got? And it usually has a story where it's like, well, I got in at the right time. I saw what was happening. I made some investments. I wasn't sure, but I listened. It was part gut instinct, but it's gut instinct followed by, hard knowledge of what's going to happen, maybe even some sort of guidance from somebody. But, it's when you combine those two things, that's it.
Yeah.
I really don't know how to make it any simple. I mean, when they ask, how did they get to that point? And it's like, well, by doing this, during that correction, during that downtime, during that, crisis that we had during the recession, they got in and they went all in and they pulled out when things started to correct, but that's when everyone else jumped in, when it started to correct itself, and they saw what all the other, real estate investors were doing. They say, I want a piece of that. But by the time they jumped into it, it was like, well, the correction's happening. Now you're going to fight for you're going to be the hyenas basically fighting with the lions left over.
One of the things I'll, point out to you why we're doing this episode is I want you to really think about this question that I'm going to put out there for you is, who do you think got the most wealthiest during the gold era? Who do you think it was? A lot of people might think, hey, it was the people that, obviously
the 49ers, right?
That's what they're thinking. Gold.
Yeah.
But it wasn't. It was the people selling them the pickaxes and the shovels
and the water
that were making the most amount of money. Because at that time, obviously, it's not, what an ounce is today. It's obviously substantially less. But, it brings up a point to what, I'm trying to say to you is if you are, a couple years too late on this, it's already too late.
It is. Well, think about it. I mean, yeah, you could still go mine for gold right now and collect a huge profit on the gold, but it's going to cost you so much more money to get that little nugget of gold because now you got to buy the land.
Well,
then
you
everything
those
else.
Shows like they have Alaskan gold and they've got the gold hunting shows. Dude, it cost them a ton of money to go up there to Alaska which is, they've done one in the jungle, they called one jungle gold. It costs so much money to get that gold now because the people that were smart got in early, so they didn't have to, take all this heavy machinery and rent the land and then give a portion of the profits to the person that owned the land. It's so much different. So, if you check out those shows, you see like, hey, they got 100 ounces and they're all excited about it, but you got to think about those expenses.
Yeah. How much that costs to get 100 ounces of gold, was it worth it? Did you really make out? How much did that boat cost?
Yeah. These shows, it's called Gold Rush. And I believe it's on A&E.
I believe
it's on one of those networks. I like just watching it because I'm like, how much can they actually get? But having their setup is just so freaking expensive. The gas, the oil.
And they don't always show you all the downsides, like all the times they didn't get gold and they still had to fund, that investment.
Yeah. A lot of these people, they get private equity partners to invest into it. If they don't do well, they still have to owe those people money. With asset managers, the way we're doing it, the great thing about it doesn't cost you anything.
Well, yeah, swing that, all that metaphor back to what we're talking about with real estate. When you can bring private equity partners in on your wholesaling business, people that say, yeah, I have money and I would like you to make it grow for me. As a wholesaler, you're like, great, I can do this because you know the strategies. But if you wait like a month and you bring them maybe one deal, how long are they going to be a private equity partner for you? They're going to pull out and go to the next guy who's like, this guy, Jason, he's talking about, how this guy he's investing with is making him, I don't want to give percentages because I don't want to be that kind of person, but making him a decent return on his money consistently every month. And I get one deal a month, maybe 2 deals a month out of you at a really small percentage. It's not really feasible for me. I mean, yeah, I'm making money, but I could be making more. Eventually the grass will be greener. Yeah. And the one that's working with getting multiple deals and able to do them at really good discounts without, breaking their back and, leaving slim margins on the private money partner side, maybe.
Yeah. In fact, right now with our direct deal profits program, we've got tens of investors reaching out to asset managers and working on closing bulk deals. We have it, we see it, it's working, doing deals right now in bulk instead of, the onesie deals is probably one of the last ways to get deeply discounted prices in this current market that we're in, which is crazy to get the type of discounts that we're seeing. And, that's why over the next, I would say handful of episodes, we're going to focus on bulk deals. We're talking about REOs, your bank-owned foreclosures, your real estate owned, and your notes. So for those of you out there that have been, reaching out to Mike, and Mike works behind the scenes, so he knows of all these folks that are working behind the scenes. We've got tens, if not hundreds of folks reaching out to it, and it's not even scratching the surface. So we're going to be talking about REOs, bulk packages. We're going to be talking about bulk notes, and it's huge because right now this is the time. We're letting you know ahead of time. And I wish somebody would have done this to me back in, early 2007. Hey, Jason, get involved right now. This is what we're going to go over. We really didn't have podcasts the way they are now. We really didn't have a whole bunch of stuff. And it's only 12 years ago.
Oh, man.
It's crazy.
When I remember when we first started and you first started, it was like, if you wanted to learn, you basically had to buy something. You had to pay for a course. You had to go to a seminar. You're right, podcasts and stuff. Man, if they had podcasts back then, and Jason and Jason Lucchese, Senior told Jason Lucchese Jr. from the No Flipping Excuses show, hey, Jason, get involved with this.
Yeah, no, exactly. And, one of the things that Mike and I wanted to kind of let you guys know about is we've got an event in the works for the end of July where we're actually going to be going deep on working with asset managers and doing deals in bulk. If you would like to come, shake my hand and tip a glass of suds back together, Mike will sip the suds with you. I'll have a glass of water.
I'll have
or
one beer.
Or a ginger ale.
I'll have one beer. That's it. So you better all gather around.
You could find out more by visiting us on the event inside the Asset Manager Millions Facebook group. We designed it specifically for folks that are interested in doing deals bulk with asset managers. We're going to show you a lot of the great things that we're doing in our business today. So if you want to learn more, pay attention over the next few episodes that we're going to be doing. Or if you don't want to wait, you could join us in the conversation inside at the Asset Manager Millions Facebook group. We'll have, if you're seeing this right now on a Facebook, or if you're listening to it on iTunes, just type in Asset Manager Millions on Facebook, and our group will pop up. There's just a couple quick questions. It's free, so you could come over there, check it out. You could get in the middle of some great conversations that we're having right now.
There is some really good I don't want to say I was surprised on how quickly it blew up, because this is a great topic, and the enthusiasm for the people that are in the group and already jumping in with like, hey, I got this, you've got that, let's get together, what about this? The information is going great, but it grew up fast, and it's not like one of those spammy groups. That's what I love about it the most. It's just good conversations. Like, I'm always looking for a group where I can join, and it's actual people I can talk to and work with, and that's why I joined here. I didn't join here to get a whole bunch of articles on what I can buy.
Yeah, the great thing about it is there's a lot of high end people in there, and when I say high end, it doesn't mean like they've got tons of money. I'm talking about they've got the right mind for this. They're a professional. They ask great questions. They give answers. It's a really great community. And I think we just surpassed 300 members. So it's not like anything crazy. If you post something, we're going to see it. We really want you to head on over there, but keep in mind, we're going to be having some great episodes coming up here over the next, I think, few that we're going to be talking about bulk deals. We're going to be talking about notes. So I'm excited about it. Mike, is there any parting words that you have for our folks out there?
I'm just really pumped. Being the producer of the show, working with Jason, I'm really excited about the lineup we have. Him and I have been talking about it, and we really want to break something down content-wise, because that's why you're here. You put your time with us. We just wrapped up a whole bunch of stuff, and I did some video where I was thanking people for listening, because I know you take time out of your day, so we want to give you good, solid value for your time that you invest with us. And I'm telling you, over these next few weeks, it's going to be something so solid that if you miss out, it's going to be like you missed out going to a seminar with, the leading experts in real estate giving you 100% content. Like, would you really walk away from something like that?
Yeah, it is. It's pure content. And that's what it's designed for, is for us to, all be in this together, help one another out.
Yeah.
And, I look forward to talking to you over the next few episodes that we're going to be having. If you'd like to join us in the Asset Manager Millions group on Facebook, that'd be awesome too. Just come on over, request to join. And there's going to be 2 simple questions. The first one is, when did you start in the business, and how many deals have you done? That's it. If you're brand new to it, just say you're brand new and say you've done 0 deals. We just want to make sure that we're weeding out people that are just going to come to the group for the wrong intentions. So far, we've had nothing but, amazing people get inside the group. So with that being said, I'm Jason Lucchese. If you need anything whatsoever, you could always reach out to us. Support at jasonluchese.com. That's support, SUPPORT, at jasonluchese.com. And that's JASONLUCCHESI.com. Thanks for joining us today. Thanks to The Myth for joining us on today's episode. You guys all have a great day, and we'll see you on the inside. Take care. Bye.